Anytime we engage to decide on the strategy to scale a business, we like to define what we call the growth operating system. And the growth operating system, it's both the KPI hierarchy you need to put in place in order to have the business impact that you are looking for, and the dimensions that you need in reading the data to achieve such business impact. So it's a fundamental structure on how to look at the business. It's almost the plans of an architect. How are you going to define which data do you need to look at, across which dimension, to tell yourself that you are doing a good job? So a growth operating system requires you to understand what is a strategic and financial goal of the company. It requires you to understand what are the levers at your disposal to impact those outcomes, define it, quantify it, and then structure it into KPIs and dimension that allows you to tell you whether you are moving in the right direction.
David, great to see you again.
Nice to see you.
Today's episode, we're going to do a deep dive into the growth operating system, what it is, what people need to know, and some specific things that they might not be aware of when it comes to what a growth operating system is. So we're going to define that here in just a moment. But I would love if you could start by giving us a little bit of an intro about your background and your experience and what's led you to have so much knowledge about this topic today, particularly for our listeners who may not have heard of you or been familiar with your work before.
Yeah, I think three key moments. Hi, Zan. Good to be here. Think about my career as three phases. One, I started in the direct mail business, D2C. That's how I developed my baseline knowledge on direct-to-consumer marketing and direct-to-consumer growth. Then I was a CGO, CMO of growth stage businesses. I was a CGO at a company called Ideally, which was a shopping website, a member-only shopping website that grew from zero to $200 million in a couple of years. And then I was a CGO of a two-sided marketplace called Fiverr, from Series A to just pre-IPO for a couple of years. And then the last phase is what I've been doing in the last 7 years, which is helping companies scale efficiently. And we do that with our teams at Exactius, and we do that with our tools at Violet Growth. So good to be here, and happy to share what I can.
David, so you've had a deep experience in scaling companies all the way up from startups to $100 million to even far beyond that. You've talked about this concept before of a growth operating system. For somebody who isn't familiar or it's not well defined for them, how would you think about what that is?
Anytime we engage, or I engage to decide on the strategy to scale a business, we like to define what we call the growth operating system. And the growth operating system, it's both the KPI hierarchy you need to put in place in order to have the business impact that you are looking for, and the dimensions that you need in reading the data to achieve such business impact. So it's a fundamental structure on how to look at the business. It's almost the plans of an architect. How are you going to define which data do you need to look at, across which dimension, to tell yourself that you are doing a good job? So a growth operating system requires you to understand what is a strategic and financial goal of the company. It requires you to understand what are the levers at your disposal to impact those outcomes, define it, quantify it, and then structure it into KPIs and dimension that allows you to tell you whether you are moving in the right direction.
And when it comes to practice, Let's say that you come into this company and you're looking at the growth operating system. What do those meetings look like? What are those conversations to be had to be able to start saying, this is the definition around what we're going to focus on today?
I think first definition is, what is a goal? What are we trying to achieve in the next 3 years or 5 years, and then what is a goal for the next 12 months? What is success? So success would be, I want my company to grow from 50 million to 70 million this year. Okay, great. How are we going to achieve that? What type of company do you have? Okay, so what are the drivers that make this possible? Let's understand, let's do it for an e-commerce company, for example. I want to go from 50 to 70 million. What do I need to be true? Probably I need to have the right customer retention. I need to make sure that the customers that I have keep buying at the rate they were buying. Maybe my financial model assumes that my existing customers needs to buy a little bit more. Another type of assumption might be, I need 1 million new customers in order to be able to achieve those targets. And I need that million new customer to be able to spend per customer a certain level of revenue. And I need to make sure that my gross margin is steady, to make sure that I'm not bringing people at a discount and bringing people that are bringing the expected gross margin per customer. So those, by just simplifying a little bit the financial goal settings that you have, you can bring those different KPIs into your growth team and start to organize it in a way that allows you to have the team focus on those goals and start to deliver targets and goals for every member of the team around those goals.
I want to zoom into this executive layer, the leadership team that right now is having conversations. So the CMO, the CEO, and the CFO, and they all have different things that they're chasing after. So what do those conversations look like when the growth operating system is broken or non-existent? And what do they look like when that is implemented correctly?
In my experience, often when you have the CEO, the CFO, and the CGO, CMO together, you have different type of profile, and every companies are different. Sometimes you have a CFO that is very operational, or sometimes it's a very strategic CFO. You might have a CFO that goes really deep into the growth levers, sometimes not. And sometimes it's either that role is played either by the CFO or that role is played by the CEO. So often it's not a three-way street, but rather a two-way street, CGO, CEO, or CGO, CFO, where the CEO or the CFO becomes great consultant and thought partner into implementing those strategies. So that's the setting, right? So that conversation is going to go really deep into what's the business. So that's the setting. That's the conversation will happen probably between two key partners here. So number one, what is extremely important in defining that growth operating system is understanding from the CFO the financial constraint that the company had in order to achieve the growth targets. And financial constraints, and they're just constraints, right? I have X amount of cash. I don't want my cash flow to be lower than X in the next 12 months. Or cash is not the issue. What I need to make sure in talking to the board is that the efficiency, the 1 year efficiency or the 2 year efficiency of my marketing investment is strong. So understanding and calibrating the horizon of what we need to work with and the metrics that are most important for the CFO in terms of constraint are the first ingredients that tell you what you need to obsess about. Because at the end of the day, the person who will decide whether you can invest more money into a growth strategy will be the CFO. They need to be your partner from day one. You need to be able to have a strong relationship with them and understand the business the same way. And you need to be able to talk their language so they can respond fast and efficiently to what you need from them, which is most often the confidence to provide you investment to drive the growth of the business.
That relates to something that I heard in a different podcast that you were on, where you talked about what I believe you called the 70-30 rule. At the time, you were talking about how you invest. You have to be able to invest in failure in order to, or invest enough into things that might fail to find the things that succeed. Could you speak to that, and particularly how that relationship between the CMO and CFO have to be healthy to have that growth mindset?
That level, it's really the responsibility of the CGO to be able to find the space within the financial constraints that you have. Meaning that as you set the goals for your growth team, align with the CFO. You need to make sure that those goals are realistic enough so you have enough space to fail. So for example, if a company wants to scale fast, but the efficiency requirements that are being defined with the CFO are too tight, more likely than not, you will fail in delivering that goal. And the conversation in that room should be to set up less aggressive goal with tight space for failure. If you want more aggressive goals, then you need to discuss together as more space for failure. Once you define that space with the CFO, the CGO can turn around to its own team, to their team, and decide how to break the level of test versus continuation that you want to deploy. So if you are in a tight spot when it comes to opportunity to fail based on the goals you set with the CFO, probably your continuation versus test percentage might be 90% 10 or 95% 5 towards continuation, but don't expect to scale fast, right? In those situations, don't expect to have a breakthrough. However, if you have more balanced targets agreed with the CFO, then you can really start to think about a 70-30, 80-20 rule that allows you enough space to go find a new opportunity for the business that allows you to find a path to growth or path to efficiency.
When you think about scaling this through time, you have to start somewhere. It's going to be imperfect. And then it builds upon itself as you hit certain benchmarks, maybe 50 million, 100 million, and so forth. What are some key challenges in scaling that system of both teams, tech, and playbooks and execution so that you can make sure that you're not dropping the ball along the way?
The first thing is the money.
It's always the first thing.
First, do you have the money to be able to be aggressive? And along with the money is a clarity on your return on investment. So if you don't have the fund to scale, most of the company except, the exception, you have a few exceptions to the rule, but usually you need money to be able to put it to work, get the result, and scale. Even if your company is profitable, even if your company is healthy, if you have aggressive scale goals, what matters, even if you have a very healthy company, is the velocity of growth from month 1 to month 2 and month 2 to month 3. And even if you have say, a payback period of a couple of months, 3 months, 4 months, 5 months, 6 months, if you decide to increase your investment materially from month to month, you still need to fund, 4 months, 5 months, 6 months of cash. And this could be material dollar amount. So the cash element is a key vector or a key factor in being able to go through those gates. And that's why your relationship with the CFO is so important. And that alignment is so important. And you are working together looking for the same thing. That's one. Provided this is managed and provided that you are able to, you have the visibility on the return on investment, you know the reason why you are scaling because you have the right operating system, growth operating system. You know which KPIs are the driver of your growth. Is it retention? Is it frequency? Is it spend per buyer? Is it, if you have a dimension business, is it a specific conversion between two steps of the funnel? If you know which area are strong and weak, or turning strong or turning weak, looking at trend lines, then the key is going to be to have enough cycle to invest in each of those areas. In general, you want to lean on what works and get out of what doesn't work. In a lot of situations, people have tendency to try to fix what doesn't work. It's often harder to fix what doesn't work than to lean on what works. And I'm not saying if it doesn't work, maybe there is an operational reason for it. Maybe you have a funnel that doesn't work. Maybe you are not following best practices to do it. But I can't emphasize enough the idea that before trying to fix what doesn't work, try to push what works and be very aggressive there. So once you agree on the area or you decide on the area you want to lean on, then it's what you discuss, which is, do you have the production capacity internally to have the work cycle to find new opportunities within the area that works or within the area that needs help. And it goes with a set of initiatives with a 70-30, the 80-20, and then you need the right cross-functional team to work together to make sure that you don't miss a beat on what could be the reason why it's working or it's not working, so you can double down on it.
Maybe it'd be helpful if you could share some stories of when a growth operating system has led to insights to help a company scale. I think sometimes early stage founders or first time founders, even if they're not early stage, don't necessarily know what the possibilities are in terms of, we look at the right metrics, we look at the right goals, and now we can scale in a completely new way.
So I give you some examples. I will not name companies. But I'll describe the problems and how changing the framing of the data and the goal for your team change the pace of scale for the business. You have a business with a very low price point. It's a low price point. You are basically, and because it's a very low price point, when you acquire customers, the margin you do on every single customer, it's quite low. And you think, dude, I really need to increase my price point. Like that's what will allow me to scale this business. And then you obsess about scaling your price point. But it's hard to scale a price point. It's not happening in 2 months, so depending on the type of business, might be easier or hard, but usually hard. for me, it's a strategic initiative. It's something you do over many quarters, and over time, you are able to scale your prices with your customer without impacting the perceived value of your brand, right? How they think about your brand. 100% you can start this process, but it's not going to help you for your objective for the next 6 months. It might help you for your objective for the next 2 years or 3 years or yeah. The truth is that you might realize that the lower price point allows you to bring new customers that you would not bring otherwise. And by suddenly shifting your focus from a pricing component, you shift your focus on acquisition and making that acquisition effective. And by bringing more customers to the business, you are able to increase the velocity of growth for the business that in turn becomes returning customer, in turn might be able to buy more frequently from you at a similar price point, will allow you to make the lifetime value target that you need in order to cover for your cost of a customer acquisition. By just changing the focus, changing the goal, you are able to achieve your targets. That's one example. You shift from one area of the business to the other. Another example, it's for e-commerce businesses now. Subscription business, transactional and subscription business. Sometimes companies obsess about the subscriptions of a business. How many subscription? Oh, I have an e-commerce website. I introduce subscription, and my subscription revenue keeps scaling. And I'm very happy about that. What you realize is often in companies that run subscription businesses, the behavior of the customer is not being a subscriber or being a customer that pay as they go with traditional orders. Often they do both at the same time. Customer might have a subscription and place another order with the next month, and then they have their subscription the following month. So they have a mix of order type in the way they transact with a customer, with a company. In the situation, shifting your focus from subscription to subscriber will change completely the way we will start to market to that base. I'm not necessarily going to try to increase the share of subscription out of the total share of my customer, but rather I'm going to ask myself how I'm going to get those customers to spend more with me, whether it's subscription or transactions. So by just deciding the vector and the KPIs that matters to you, you will be able to find opportunities that you didn't even think about before. All of that comes from from that KPI hierarchy, from that growth operating system that starts the conversation. And to be clear, as you scale and as your business change, your growth operating system is going to change. Your focus is going to change. This needs to change as well. But if you are able to do that, then suddenly, and being very clear about it with the team around you, the way the team is going to think about it will help the company innovate much faster and find wins much faster.
When you think about the state of the world today, there's a lot of marketers out there who are saying a lot of different things about artificial intelligence, generative AI, and how this is going to change how we think about the data and the metrics behind scaling big companies. We talked to Paul. He talked about how there's this silos of SaaS products that happened in this last era. And I'm curious, what's your take? What's your take on moving beyond SaaS? Is that something that's real? Is that something that's happening today? or is there nuance to this that would be important for marketers who are scaling big businesses?
I don't have a point of view of what will happen or not happen, or whether AI agents is better than SaaS and it's the end of the SaaS product. I don't know. What I can tell you is the fundamentals of having structured data in order your AI layer to be effective is critical. And I think that that fundamental is not changing. It's even more important today than it was yesterday. Yesterday, the SaaS product delivered to you a structured view into a function of the business, Salesforce, and how to create my funnel, Shopify in the way I'm going to look at the transaction of my business, how to think about it. Now, what is more important than ever is that you are able to marry all of those sources of data, whether they are marketing, operational, financial, connect it in a way that an AI agent can understand it, like a business person can understand it, and then apply recipes. So you take advantage of the AI capabilities across those varied sources of information to go quicker to the result. Now, does that mean that you are going to have AI agents that are SaaS product, or you have SaaS products that say SaaS product? I don't know the business model that will come out of it, but what I know and convinced is that the speed to a centralized structure data destination is more important than ever. And having it today will allow you to iterate and find the solutions that are best for your business.
That brings us to kind of a great question for somebody who's listening up to this point. It's like, yeah, I agree. These are all key things. I've resonated with these ones and I've learned here. And I believe that I'm at the stage where I really need to invest in the growth operating system. So the question is what are those first steps? What are the things that an executive needs to do? Is it hire an internal team? Is it look for an outsourced provider? Is it, start to understand that fundamentals of their business goals? How would you walk them through the beginnings of this initiative?
I think that I would start by having a conversation with a senior leader of my company and ask and discuss what are the levers of growth of the business. It can start between the CEO and the CFO, or it can start between the CEO and the CMO or the CGO, maybe all of them together, and say, do we have a clear view of how do we go from A to B and what are the levers of growth? Those levers of growth are very, very simple. If the commitment is here, the clarity is here in the room as to what are those levers of growth, then ask yourself next, what is the best way to operationalize this? So we track them and we lean on them in the way we set goals for our team. And here you have different solutions. When you operationalize, you can decide to do it in-house, and you can decide to do it with a managed service business. We do that with Violet Growth, so I have an opinion about it. It's much quicker to do it with an outside company than to do it internally. It's going to be faster and cheaper to do it. So that's one. If you don't have a clarity of how do you go from point A to point B, because that's not how the team operates. That's not how you think today in the company. Reach out to people who have done that for many, many, many years. And even in the space of a conversation, you can have the clues of where to go. discuss it with growth advisor you have around you, and then move to the next steps. How do you operationalize after that? So those would be my advice.
I'm going to put you a little bit on the spot here, but I think it's important. When you think about this knowledge that you have, is this really something that's specialized, or is this something a lot of people know about when it comes to companies of this scale? What I'm getting at is how many companies out there are thinking they're doing the right thing, and they're not really focused on the details that matter, that are going to be able to move the needle.
I think the vast majority of companies are focusing on secondary KPIs that are focused on specific functions. Marketing team are focusing on marketing KPIs, sales team are focusing on sales KPIs, and finance team are talking about financial KPIs. I think it's the case for the vast majority, because what you said, because SaaS companies have developed over the years a very clear point of view on how to best run the function. You need to be able to describe to your CFO, your CMO, your salesperson, and the CEO to agree on the set of 5 or 6 levers that are critical to the business. If you have those, it will be obvious to you. But if it happens that, when a CMO and a CFO are in the room together and they spend 40 minutes discussing the data they look at and 20 minutes discussing the strategy, or even worse, agree to meet again to talk about the numbers, it tells you that you don't have the right operating system. You need to obsess in simplicity, in going to find those KPIs that your key functions are going to agree with, and then execute against it.
For my last question here, I'm curious, how do people find you or find out more information about this? I mean, if you wanted to learn more, where's that source of information on the internet to be able to say, hey, I'm going to become an expert here?
violetgrowth.com.
Okay. Thank you, David.